Welcome to TradeTheMBI.com. This is John. This reports for the 12th of June, and we've got some excitement that's happening for the week coming up here. We can see that we've been sort of suffering in a little bit of the malaise here. This has been our defining line of the ABM gold line right there, and that's simply because we've been in some weak signaling here with the decaying midterm buyers in the green, and just pretty much a static on the long-term buyers with red. It's just been flatlined right across there. What's been encouraging about this, even with the weakness signals of the orange popping above, we've had a reset of the steel short-term buyers, and that's usually what it takes. Also, the dip that took place below the negative 50 here on the extreme histogram didn't go all the way into the oversold, which usually indicates a little further weakness is likely to happen. It doesn't mean that we're not going to still level out down there. I mean, clearly you can see shorts activating, but they're getting to a point where when we see that pivot, that would be the final move of same thing sort of happened like over here where it peaked out, and then you get your pivot going down, and if you have the reset, then you get an opportunity for a nice buy opportunity. We're seeing a little bit of weakness to start futures and that. Obviously, Fed hike coming up again, trying to normalize situations, and also wanting to dampen down any potential Trump enthusiasm and stuff. Their biggest concern is they think that there's a massive constriction of labor, and that will cause wage inflation. And wage inflation is really the biggest thing that they worry about in all aspects, because that leads to real inflation as opposed to some of the fake stuff. Energy has not really been a factor at this particular, and they don't even count it anyway. So, I mean, that's the one that most real people use, but they don't want to know what the real cost of things are because it fluctuates too much. Now, from the NASDAQ standpoint, look at that beautiful drop. It was partially bought back, but not even close to getting back to the green ABM, and that's going to become the new baseline turnaround point. But we could see that it was continuing to have difficulties, a little bit more so, and we knew that this was going to happen as far as an overcorrection for the NQ, because it had to normalize itself back to the S&P, and this is exactly how that works. So drop was a little bit further, the comeback a little bit less, but relative to the S&P, just a little bit softer, and that's only because it had been a little more out of line. But you can see we've got a perfect reset on this. Once this turns down, this is going to become an excellent opportunity to jump back in. And so this is where sometimes a little patience, you got to wait for it. If you're looking for that, we could see that we were in a soft period. It just, as long as it was holding above the yellow ABM, I'm okay with it. But once it goes below there, definitely stronger to the short side. Of course, I've been a little bit more to the short side since that flipped over the last few days, even into last week. So that's fine. Won't be afraid to flip around, despite what you hear. I mean, I know everyone's talking about recession and all these other things. At least there are words being spoken by some people with regard to how things are going economically. And the reality is, with the stalemate in Congress, the euphoria, the question is that euphoria, people thinking that the business climate was going to turn around, is that going to be enough to sustain it? Because you're not going to see any kind of real meaningful tax reform, healthcare reform, or it looks like anything else. So we're pretty much at a standstill, and if that breaks, though, the market is just going to skyrocket, because we're pretty much just holding our breath at this particular point. Euro holding up just pretty well. There's still the rumblings of the Greek situation looming. Everyone's pretty much forgot that. The snap elections in Britain did not go well, which means that no Brit exit is taking place, which that is going to actually strengthen the euro. I would expect this to move closer to the 114, 116 range relatively easily. Right now, we're still in a short period here because we've had such a significant move. But that's a net positive. And I think that they're going to look to see if May comes up with the government, because that's going to definitely impact. But that actually would be a net boon for the S&P, given that a significant amount of S&P revenue come from overseas. That doesn't help the fact that the Spanish banks, Italian banks, all of them are insolvent. They're just going to keep throwing money at it. And as long as the federal agencies are willing to, whether it's the ECB or even the Fed, or throw money at everything, the market's going to see that as a backstop and take advantage of it. And yeah, this is just a ridiculous level for these. Clearly still in a short signal, so I would expect it to break down, particularly if they raise rates. There's just no reason why we wouldn't be really pressing down into the 113, 114. I know there's been increased demand from China and stuff, but still makes no sense on a curve basis. USO, baseline here at the lows. This is probably not going to get too much lower than this. No one's really going to go there below their production values. OPEC's in just a world hurt. I don't even know if it's a relevant agency anymore. Once the U.S. spigot opened, you can't put that genie back in the bottle unless they tighten up restrictions on regulations, and that's not going to happen with Trump in place. So for the foreseeable next 3.5 years, energy is going to be inexpensive in America, and if that doesn't fuel growth by itself, then there are some broader systemic issues that really would have to be addressed to make things change. And gold, having a little bit of a retrace, and we're okay with that because we know we had these positive extremes that needed to get filled back in. They're now just about there, and ready for the reset. And that will be the next wave. And again, that's just perfectly normal. It's not any macro change. Okay, we're going to shrink the chart here for the 5K, look at a little bit of intraday action. We had the nice peak coming up there, and then look at that spike of the orange. If you didn't believe it the first time, the second time should have convinced you. And from that point on, it was just straight downhill. The early signal that came in wasn't a bad one. The problem with it was the steel so high up, but when it moves above that plus 13.5, like I've mentioned, that's just like it coming from below. It's when it tips back down that usually you get a little bit of softness, and all that led to was consolidation, which was perfect. And then you finally got higher crossover, though kind of in the no spark zone is what we call that range between the 7.5 and negative 13. And sure enough, I mean, look at that, you got a little bit of a bounce, and it's already kind of flattened out from there. So it really didn't do anything. It didn't help that it ended up with a short signal. But seeing that one, I'm going to have to add that to the adjustment because that would have been the appropriate reset point here on the 2.5 with the plus 13. Actually, it needs to be even higher than that. This one should have been closer to 19. Yeah. You have to get over like an 18.45 before it has that inverse effect. And I know that's complicated, and that's why it needs to be just something that converts so that you don't have to think about it, because it's impossible to remember, you know, oh, well, let's reach this one. What was the number? No, we don't want to do that. We want to have it so that it's just straightforward and easy to do. All right, run along with the economic talk, and but it's important because I think it lays the basis for where we're looking to see things take place in the summer, particularly as a potential buy curve softens a little bit as people wait out and see the impact of some of these dynamics, because the Fed does not seem to be on the same page as the White House, and that is going to create some interesting dynamics. So we're going to look forward to that one. And also added volatility will be nice as well. Look for me on the Skype chat. Trade well.